From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 13th, 2016. In today's video, we're going to be taking a look at the USDJPY, the US dollar versus the Japanese yen. Starting here on the daily time frame, if you've been watching the daily analysis for the past few days, you know that we have been in a buy. We've been going long on the US yen from the low down around the 103.20 level all the way up into the low to mid 104s over the past couple of days. So it's been a very profitable trade buying this currency pair and going long. But we're seeing indications of resistance and indications at least that there could be a little bit of a pullback or potentially over long term a reversal. Now today we do have some news that may interrupt this a little bit. We do have unemployment claims out of the US at 8:30 Eastern US time, about 40 minutes from the recording of this video. If it comes out significantly positive, of course, I believe this currency pair will turn back higher again. So that's something we need to be aware of. If it's negative, if it misses the forecast, then we might see this make a little bit of a pullback back down to the support levels that we were looking at earlier on this week. If you take a look here on the daily time frame, look at the orange shaded area here, and I'm actually going to zoom it in one more time. Take a look at the orange shaded area right at the mid portion of the chart. Take a look at the blue circle back here. You see resistance into the orange zone and eventually reversal that caused it to go all the way back down to the 100.0 level. So I'm not saying that this is what's going to happen, but what I'm saying is there's significant resistance here inside the orange zone, 103.95 to 104.25. So that's where we are right now, and we want to watch for similar indications of potential intraday or even longer term reversal. Right now we see the market bouncing between the green and the orange shaded area. Again, we took the buys into the 103.20 level earlier this week, profit all the way up towards the 104.60, so it's a significantly profitable trade. We closed profit, we protected profit, and now that we've seen some indications of potential intraday reversal, I've went ahead and closed the remaining portion of that trade just underneath the orange shade area. So all in all, very profitable trade for the week on the US yen. Let's take it down to the 4-hour time frame. And of course, we already looked at this orange zone and the green zone on the daily time frame, but here it is again on the 4-hour. But some interesting things to point out here. Of course, we have the couple of times where it found resistance here on the left-hand side of the high, and I think that's interesting. Two resistance levels on the left-hand side of what is currently our highest high that yesterday made. Let's see, the top of that blue candle is all the way up at 104.63. So you can see significant profit from the buy at the green zone, but 104.63 capping the market, and now it's had this big bearish candle, this big red candle that pushed all the way from the highs into the mid 104s, back now underneath the 104 level into the upper 103. So that's a very significant candle and a significant indication that the sellers may be back interested in this currency pair, especially if we get that negative data on unemployment claims out of the U.S. today. I think we could see this make a little bit of a turn back down to the green zone. Now, we do have a little bit of a short-term trend line here that we could recognize. Of course, this little black trend line right here, the last two lows, testing that right now. So if it stays above that, of course, we might see another challenge, and eventually, with positive data, pushes back above the orange zone. But underneath the orange zone, we know that there's resistance here, and if it breaks there, we could even see this back down here towards the green zone, or even a reversal takes it back under the green zone to go lower. So this is a key area. We're consolidating or contracting in a congestion zone right around this orange shaded area. So for the day today, if you're looking for reversal, this becomes an area to consider here into the orange shade area, 103.95, 104.25. We look for fairly minimal risk sells into that 104 level. Stop loss would be above the current high. But the biggest thing is we just don't want it to break back above the orange shaded area. Could this over time produce what we would expect to be a head and shoulders pattern? Possibly, but I don't think that we can really classify it as that yet. I think the biggest thing that we're taking a look at is that big red bearish candle that we saw back there just a couple of candles ago, giving us some clue again that sellers may be interested in this currency pair once again. But we can't guarantee it, especially if we get positive data out of the US coming up in just about 40 minutes from the recording of this video. So we're watching this area. I'm going to keep an eye on the news. I'm going to wait for the news, truthfully, before I make a trading decision here I don't have a pending or order open yet, but I just want to keep an eye on this orange zone. Negative news with unemployment claims, we would look for resistance into the orange zone, break of that little black trend line, and a target back down to the green shaded area on a miss of the unemployment claims forecast. If it's positive and it exceeds or is much better than the forecast, then we would look for this to possibly break this orange zone and go higher. So while we do want to trade the trend, we want to be cognizant of the fact that we do see some interest from the sellers here on the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.